quick introduction. I'm the CFO of Condor. I'm standing for Mark Child, our CEO, who's down at the project. So, quick overview. What's Condor? Well, it's developing the La India Gold Project in Nicaragua. It has a good resource, 4 grams a ton, 2 million ounces, and potential for more. It's listed on AIM. We hold 100% of the project, and we're currently in the process of dual listing the company on the main board of the TSX. So, 2 real thrusts to what the company is doing at the moment. Firstly is to get the mine permitted. We're aiming initially for a single open pit, 2,800 tons a day processing plant, 100,000 ounces per year. And simultaneous to that, we want to increase the resource by 1 to 2 million ounces, so that's from 2 to 3 million ounces initially, certainly. Those are the sort of the 2 real focuses for the company. Okay, the investment case, sort of 3 or 4 main points coming out of this. One is the company is significantly undervalued. It's capped at $15 per resource of gold in the ground, and that compares to a much higher figure for the TSX peer group. Has very robust shareholders. You can see there World Bank, Jim Mellon, Ross Beatty. Ross Beatty came into the last 2 funding rounds. Those 3 have between sort of 6 and 8, 9% each. The resource I've touched on, 4 grams, 2.3 million ounces, 100,000 ounces per year initial production, rising to 165 if you include satellite feeder pits and go underground. And there's potential for more in the area. The reserves and the cash costs are very competitive. The capex for the initial project is $120 million, so that's very achievable for a company like Condor. A little bit about Nicaragua. It's actually not a bad place to be if you're a mining business. There are 6 companies listed on Toronto that are active in the country. I think we're the only one on AIM at the moment. There are 6 operating mines. In 2016, they produced about 260,000 ounces. Gold is important. I think the biggest export from the country is coffee, and gold's third. So it's actually not a bad place to be. There are various laws in place which protect the interests of foreign shareholders, foreign investors. Our project, the La India project, is at Red Blob in the sort of northwestern sector of the country. We have infrastructure on site. We have roads going through, power lines. It's about 70 kilometers as a crow flies from Managua, so it's actually relatively accessible. Zooming in on the project, I mentioned 2.3 million ounces. It's actually a historic mining district. It was mined until the 1950s by Noranda. They took out about 560,000 ounces. What you see there is about 10% of the project area. The resource is held, sort of focused on 3 main vein sets: La India, America, and Mestiza. We've done a PFS to 43101 standards that was focused on a single open pit. We've done PEAs as well, which contemplate satellite feeder pits and going underground. The output goes from around 80,000 to 140 and more, as you'll see in a moment. Permitting has weighed on the share price this year. The drill results have actually been really very good. The price of the stock has declined, and that's because of concerns over permitting. It's taking longer than it should to reach fruition. We've submitted an EIA that's been technically passed. The matter at the moment is one of relocation of around 300 habitations. For the past 18 months, we've been talking to the central government about it. We were told not to talk to the community. 2 months ago, that tack changed from the government, and they've told us to go and do a deal with the community. We want the mine to happen. The presidency wants the mine to happen. Now we have to do a deal with the community. So that's really what we're working on. We've brought in additional management to do that. The area is a sort of area where there was previously mining. So all things being equal, we should be able to get there with the permits. Quick overview. That's about 80 hectares. Right, we did an enterprise optimization study. That was about $250,000 study. I mentioned the single open pit, about 80,000 ounces a year. If you optimize for NPV, that increases to 165 if you bring in the open pits and the underground. So average NPV post-tax, 195 million. That compares to our market cap at the moment of around $33 million. So substantial uplift. I mentioned the IFC earlier. They have 7% of the company. We have a shareholder agreement with them. Everything we do on social and environmental level is according to World Bank standards. The IFC takes a close interest in the project. Their mining team were on site in the summer. When they went to see the Minister of Mines, they were told that the company would get its permit post the elections. These are the municipal elections that just happened in November, so hopefully that will come good. Very briefly on the benefits of the mine. I mean, the community, it's a very poor area. There's virtually no running water. There will be 300 jobs coming out of this project. The economic benefits to the community are compelling. So, exploration upside. I talked about going from 2 to 3 million ounces. How are we going to do that? Well, the focus is on primarily the Mestiza vein set, where we have a Soviet resource of close to 800,000 ounces at just over 10 grams. And we put about 6,000 meters into that this year. We're aiming to, that's really sort of the main source of the resource upgrade in the first instance. We've had some good results from it. High-grade ore shoot, which might have $100 million of free cash in it, around 150,000 ounces. And we think there are more. We've completed geochemistry across the entire 313 square kilometer land holding that we have, and we've put in some holes elsewhere on the property which have brought up some good results this year. So there's very good upside there. Very briefly, the capital structure. 6 shareholders holding about 40% of the company. You can see Ross Beatty there at nearly 9%, IFC at 7%, and Mark Child, CEO, 6%, Jim Mellon, 5%. We had nearly $4 million at the end of June, so fairly straightforward capital structure. This is really the main reason why we're aiming to list or dual list the company on the TSX. If you look at the bottom right-hand corner of that table, you can see we're capped at $15 per ounce of resource in the ground. That compares to a peer group on the TSX of $74. So whichever way you cut it, the company is undervalued as regards gold in the ground. So by going with Toronto, we'll hopefully reach some uplift. Just to wrap up, what are we going to be doing? The main focus really is to get the environmental permit in place. That's the master permit. At the same time, we're going to continue to drill further, expand the resource to 3 million ounces, and demonstrate a district gold play. So that's it. Thank you.